Well, welcome everyone to Holston Conference Council on Finance and Administration's presentation of COVID-19 Stimulus and Churches. This webinar is sponsored by the Holston Conference Council on Finance and Administration, and we are so glad that you are with us today. If you're not from Holston Conference, you are still certainly welcome, but for all of my friends here in Holston, we are glad to see you here. I did go ahead and throw up a poll into the poll. It should have popped on your screen, actually, that said, what brought you here today? Either you're a part of Holston, you're part of another United Methodist Church annual conference, or part of a different denomination. So let us know about that, and that will just kind of let me know what our percentages are and how to adjust the webinar today. We have some people from another denomination. Welcome. Some of what I talk about in terms of polity will be specific to the United Methodist Church, but 95% of what I talk about will be relevant to you, so just be aware of that. And welcome to all. Looks like we have a few people that are probably accountants, I'm guessing, because they're saying none of the above apply to me. And that's okay. Might have a few of my friends on here that are accountants. Let me look and see if I recognize a couple. All right. So welcome. Looks like we are about 79% out of Holston, about 8% from another United Methodist annual conference, about 8% from a different denomination, and then about 4% that are from somewhere else, and none of the above apply. So welcome. We are so glad that you're here. For those that just entered, let me know that you're able to see and hear by city and state, public or private. It doesn't really matter. That just lets me know that you're able to see and hear. And then the handouts tab is on the upper right. You'll want to download the handouts, possibly printing the one entitled Slides with Notes is what it is entitled. And we're going to go ahead and launch into our material. I think we've given time for most people to get here today. And so we're going to launch in. I will forewarn you, I am going to throw a lot of material your way. So just hang tight. Know that up front. Also know that I am going to give you an opportunity to ask questions along the way. The best place to ask questions is not in the public chat, because I may miss it. I don't watch the public chat while I'm teaching. So you're welcome to chat with each other in the chat, but if you have questions for me, put those into the Q&A tab. You'll notice that tab up top as well. And if you click on that Q&A tab, then you can enter questions in for questions and answers, and I will make sure that I get to those. I will not stop tonight until I have answered all of the questions, at least that are relevant, that come in tonight. So just know that if you have questions, put them into the Q&A. I would rather you not enter in any questions until I have covered the topic. So that way you're not asking questions that I'm going to cover later, because that just sort of fills up the Q&A tab. So only enter in a question after I have covered that topic, or at the end, if there's a topic that I haven't covered that you would like for me to, then it's fine to throw in questions as well. So hope that that is clear enough. With that, I do need to give a quick disclaimer. This is copyrighted material. You are welcome to use it within your churches, within your ministries. Share it with other churches. I'm perfectly fine with that. But just don't stick it out on the internet for anybody to go download, and I would be appreciative. So who am I? Many of you know me, but few of you, or many of you, do not know me in this capacity. So I'm an enrolled agent. An enrolled agent is kind of like a CPA. CPAs are licensed at the state level, but enrolled agents are licensed at the federal level. So CPAs also do other things, financials and audits and those sorts of things. We deal solely with tax, and we also work with what we call tax resolution. So when people get in trouble, we deal with that. But my areas of expertise include the taxation of clergy, cryptocurrency, foreign earned income, estates, trust, and S corporations, as well as tax resolution. I am a fellow of the National Tax Practice Institute. I teach people all over the country. And in addition to my personal practice, I have most recently served as the Chief Tax Officer of Happy Tax, Opportunity Tax, Crypto Tax Prep, and CryptoTaxAcademy.com. I currently serve on the Legislative Implementation Working Group with the IRS and the Department of Treasury. So basically what that means is when Congress passes legislation, which they have done quite a bit of over the last 2-3 weeks, then I am a part of the working group, which consists of about 30 persons half of which come from the IRS and Department of Treasury, and half of which come from various states as well as industry. I'm on the industry side, and we help to write, draft, and give guidance towards the regulations that will come out administratively and how we actually enact all of these provisions throughout the country, particularly in the federal tax code. So that's what I do. And I tell you all of that simply so you know that what I'm going to talk about today, I'm actually someone who knows what I'm talking about. And I'm actually someone who stays very up to date on this, even sometimes hour by hour. And those of you that know me with my clergy hat on, which I am also a United Methodist pastor, probably didn't know that about me. So we're going to begin with a Families First Coronavirus Response Act review. And we're going to look at the Emergency Paid Sick Leave Act, which is a part of that, and the Emergency Family and Medical Leave Expansion Act, because there are some things that you need to know related to your churches that come out of that. We also are going to look at the CARES Act. We're going to look at both the individual provisions as well as we're going to look at Form 7200. It's a brand new form. It is in draft mode. I've actually, so most people don't have it, but I have included a draft of it in your materials so that you can take a look at that. We're going to talk a little bit about Notice 2020-22, and then we're going to talk about the recovery rebate for individuals, just because lots of your church members and possibly you want to know about that. Some other individual provisions, and then we're going to get into the business provisions that will really help your churches. So we're going to talk about the employee retention credit. We're going to talk primarily today about strategies for how you can cover expenses within your churches and within your ministries. That is our ultimate goal today, is to help you to understand what resources are available for you in terms of covering your expenses during this pandemic. We're going to talk about the Payroll Protection Program. We're going to talk about the emergency disaster loan and the grant that are involved in that. So that's kind of our framework. If you have a question about any of these things, once again, wait until I cover that topic. And then after I have covered it, if I have not answered your questions, feel free to throw those into the Q&A tab. But if it's on this list, then I am going to cover it. So please don't ask questions before I get to it. That just sort of fills up the Q&A tab. All right, so we're going to begin with the Families First Coronavirus Response Act. And there are two bills that we really care about that are contained within. The first is the Emergency Family and Medical Leave Expansion Act, and the second is the Emergency Paid Sick Leave Act. And then we also care about how we're going to get some tax credits to pay for our responsibilities under these items. But, and I must stress this, you are required to post a poster because of this act. And most of our churches are not yet aware of this, so I'm helping you to be aware now. And I have included this poster in your handouts. So you'll notice on the handouts tab, there is something called a poster. And that is something that you must post. So an obvious question is, well, Knox, we're not going in our building right now. We're under a stay-at-home order, depending what state you're in. And we're not going there. My employees are not going there. Do I still have to post this poster? The answer to that is you have to make your employees aware of it. So if your employees are not currently going to the building, but are still working, then you need to email this handout, this PDF that I am providing you, to each of your employees, and that will satisfy your requirements. However, if any employees, including yourself, by the way, if you're the pastor, if any employees are going into the building at all, then you must also post this on your bulletin board or wherever else you post important things for your employees to see. This is a requirement from the Department of Labor, and it's actually required as a part of this act. So you need to be aware of that. That's the very first thing you need to be aware of. So a key takeaway, if you're taking notes, is I have to post this poster, and I've provided a copy of that poster. Now, if you're the pastor and you're the only employee, then you're good. Download the handout. You've been made aware. You're good to go. But if you have any other employees in your church, then you need to make sure that you pass this around. And by the way, even if you're a church with only the pastor, you still have to physically put it up in the building if you as the pastor are going into the building at all during this time period. So let's talk about the Emergency Paid Sick Leave Act and what is contained. Well, first of all, paid sick leave is required to be provided to the employee if they are unable to work or telework. We'll talk about that in a minute. But if they're unable to work or telework due to the employee being subject to a federal, state, or local quarantine or isolation order related to COVID-19. So if you are in Virginia, where I am, if you're in Tennessee, where some others are, you may be subject to a stay-at-home order. Now, in Virginia, we all are. The governor has included all churches in this order. If you have a church that has 10 or more people, which is most of us on here. In Tennessee, I understand that this is varying some county by county. So you're going to need to check your particular guidelines within your county. And if you're in another state, then obviously you probably are aware of whether or not you're in a stay-at-home or a quarantine order. But if you are subject to a federal, state, or local quarantine or isolation order, then your employees, if they're unable to work or telework, could qualify for the Emergency Paid Sick Leave Act. In addition, if your employee has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. So I have two members actually of my church that today are required, now it didn't happen today, it happened over the weekend, but they are required to stay at home. They've been ordered by their doctor or a healthcare provider to self-quarantine for the next 14 days. So they would now qualify for the Emergency Paid Sick Leave Act because they have been advised by a healthcare provider to self-quarantine. Likewise, if the employee is experiencing symptoms and is seeking a medical diagnosis, they would qualify. Now, each of these first three things that I talk about impact the employee themselves. The next three that I'm going to talk about impact the family or household persons who are in the same household as the employee. So the first three impact the employee themselves, and the second three impact the household. That's going to become important in just a moment. So remember that distinction. Here's the second three. The first one, or the fourth one, depending on the way you're looking at it, is that the employee is caring for an individual who is subject to an order as described in paragraph 1 or paragraph 2. So basically, they're caring for someone who is personally impacted, right? Or they're caring for a son or daughter of such employee if the school or place of care of the son or daughter has been closed. Now, here in Virginia and also in Tennessee, the governor has closed our schools. If you're in another state, you're probably aware of what your scenario is. And so if the governor has closed your schools and your employee is unable to work or telework due to that, then they could qualify for the Emergency Paid Sick Leave Act. Now, if they're able to telework, then they're not going to qualify. So, for example, I do not qualify. I am able to still do my work, right? Even if I'm not going into the building, I'm still able to record our services. I am still making phone calls. Those of you that are clergy here, most of us will tell each other that we are working more than we were before this pandemic, right? We're having to learn whole new ways of doing ministry. So, if you're able to telework, if your employees are able to telework, then they do not qualify. But if they're unable to work or telework, then they may well qualify under this provision if they are unable to work because they're having to now homeschool and there's no other childcare in place for their son or daughter under the age of 18. Or if the employee is experiencing any substantially similar condition labeled by the Secretary of Labor. So, bottom line here, the first three impact the employee themselves. The second three impact the household, but say that the employee is unable to work because of something in the household. That's going to be important in just a moment. Either way, the employer cannot require the employee to use PTO or paid time off, sick days, or any other paid leave first. This is a day one benefit out of the Emergency Paid Sick Leave Act. So this leave is available regardless of the amount of time the person has been employed. Now, some other regulations I think will spell this out, but it is certain that it is available from the first day work. Applicants are excluded, but it is my opinion that even if they have been hired but not yet started, I think they're included. Now, the regulations are going to have to spell that out, but it's certain that they are included even if they have only worked 1 hour. If they've come to work any portion of their first day and then got sick and had to go home or had to go home to care for their child, whatever, they're going to qualify for the Emergency Paid Sick Leave Act. Pretty remarkable there. I am not a labor law attorney, so I need to tell you that right off the bat, but there are some teeth here. And so if you are thinking about terminating or laying off an employee on April 1st or later, then you need to consult an attorney before you do so. Because there are some new provisions here that make that more complex. And I just need to encourage you, if you're thinking about laying somebody off, you need to consult an attorney before you do that, and preferably one who specializes in employer law. So what about employees that work under a multi-employer bargaining agreement? We have a few churches in our conference that are a part of a PEO or some sort of third-party paying relationship like that. They are included, and it works pretty much the same way. The effective date, by the way, for this act is April the 1st of 2020. So once again, employers are going to be any employer that employs fewer than 500 employees. So that's going to be the great majority of our churches. If you have somewhere between 1 and 500 employees, then you are included in the provision of this act. Even the Library of Congress is, by the way. So how much do we have to pay? Well, if they're in that first category, 1, 2, or 3, where it infects the employee themselves, then we have to pay up to $511 per day for 2 weeks. 10 days, right? So that's $51.10 in the aggregate. Now, don't freak out, because Congress has given away where the feds are going to basically pay this for us. We'll talk about that in a minute. And if they're in 4, 5, or 6, the most notable of which is they either have a family member for which they are caring, or the child's out of school and they're having a homeschool, they cannot work, or telework, then we're going to pay up to $200 a day, or $2,000 in the aggregate. It's actually going to be 2/3 of the regular pay, but not less than minimum wage, and then up to either the $200 per day or $511 per day, depending on which category it's in. So that's what we have to pay. Now, let's talk about the relationship to paid leave and the Emergency Family and Medical Leave Expansion Act. So this is the second act that we have to talk about. So in this case, they get actually up to 12 weeks. So this goes for a long time, but it's only going to be one of these categories that it qualifies for. We'll talk about that. The first 10 days not covered by this provision could be unpaid, but more likely they're going to use the Paid Sick Leave Act that we just discussed. How do we calculate this one? It's an amount that is not less than 2/3 of an employee's regular rate of pay, but not to exceed $200 per day, which can be $10,000 in the aggregate per employee. Some big numbers here. Same calculations as part-time, but there's a 6-month look back and reasonable expectation if they haven't been there for 6 weeks, or 6 months rather. And again, there's 12 weeks of leave included in this, but the first 2 are not paid. So generally speaking, the 2 acts are going to sort of combine, and you're going to get the first 2 weeks under the Paid Sick Leave Act, and the next 10 weeks, or up to 10 weeks, under the Emergency Family and Medical Leave Expansion Act. So covers people for up to 12 weeks. Again, labor law issues are beyond our scope, but in general, jobs are protected, so you need to consult a labor law attorney before you get rid of anyone or lay anyone off after April the 1. And we do have a responsibility to notify employees of the availability of these benefits. We talked about posting that poster. This particular act is triggered by the inability to work or telework due to the school being closed and having to care for that person, son or daughter, who is under the age of 18. So that's what triggers this one. By the way, public health emergency means an emergency with respect to COVID-19 that has been declared by federal, state, or local authority. So that impacts all of us at this point. And the term school means elementary school or secondary school, but then childcare facilities are also included for under kindergarten persons. Effective date, once again, April the 1st, and the PEOs or multi-employer bargaining agreements are included. So let's talk about how we pay for this. We pay for this with payroll credits. So payroll credits are for paid sick leave as well as the paid family leave, and the impacted wages can be from April 1st to December 31st of this year. We pay for 100% of the qualified wages with the payroll credits, and we also get to include a pro rata share of the employer's qualified health plan expenses. And the good news is it is refundable if it exceeds the payroll tax liability. and the IRS has said these will be paid quickly. But it's actually going to get better than that. We actually are going to be able to get advances on these if we need to for cash flow reasons, and we'll talk about that in just a little bit. By the way, self-employed individuals are going to take a credit against self-employment tax, so be aware of that. If you have self-employed or contractor persons in your church, then the church is not responsible for paying those. Out of this act, they are going to need to apply on their own. So be aware of that. I've given you the calculations for that. I'm not going to take the time to go over it. But let's talk about Form 7200, which is going to give us the ability to get advanced payment of these employer credits so that we can pay these bills. So we use these if we cannot reduce our employment tax deposits to fully account for the credits in that quarter. Obviously, you can't double dip, right? So the IRS is saying that they will pay these within 2 weeks from filing. And again, we're going to use Form 7200 to do so. I've included a draft of that form in your materials. And notice 2020-22 gives us relief from the penalty for failure to deposit employment taxes. So basically what this says is that we can apply a credit. We can never deposit these to begin with and take a credit right away on the 941, which is the payroll tax form that we all file. All right, we're going to talk about the CARES Act in just a moment. But before we do that, I am going to go ahead and launch another polling question. And this polling question is going to ask you, how many employees does your church have? Is it the pastor only, between 2 and 100, between 100 and 499, or 500 plus? And obviously, there are good reasons why I asked this. So go ahead and answer that for me, and then we'll get back started in just a moment. All right. Give you just another moment to answer. For those that came in late, the handouts are available in the Handouts tab. So go ahead and reach over there if you haven't yet and download your handouts. There are several there. Betsy is asking, is this for full-time employees only? So Betsy, I'm not sure which provision you're talking about, but actually both provisions, the Paid Sick Leave Act and the Expanded Family Medical Leave Act, both include full-time and part-time employees. So hopefully that answers your question. I'm assuming you're talking about one of those that I've already talked about at this point. All right, perfect. So it looks like most of us have between 2 and 100 employees, 78% of us. About 20% of us have only the pastor. And then nobody on this particular webinar has 500 plus. And we have about 1% of us that are between 100 and 499. So most of us are in the 2 to 100, with about 20% of us in the pastor only category. All right. And so no, Betsy, for the poll, it could have meant as many employees as you have. Good question. All right. But I've already closed the poll, so it's okay if you didn't answer it correctly. It's okay. All right, we're going to go ahead and get back started on the CARES Act. And the technical name, if you didn't know, is the Coronavirus Aid, Relief, and Economic Security Act. So it was signed by the president on March 27th of 2020, just over a week ago. If you want to go look it up, it is Public Law number 116-136. And I'm not going to mention every provision, but I'm going to talk about the key provisions that impact us, and specifically for the church or for us as individuals. So the first is the Paycheck Protection Program. We're going to spend a fair amount of time talking about that. Loan forgiveness, which is related. We're going to talk about the Emergency EIDL grants. EIDL stands for Economic Injury Disaster Loan. We're going to talk about the subsidy for certain loan payments. Actually, I'm not going to talk about that, but if you want to go look it up, it is in the Act. We're going to talk about pandemic unemployment assistance, the recovery rebate for individuals, the use of retirement funds, the waiver of required minimum distribution rules, the partial above-the-line charitable contribution deduction, as well as the charitable contribution limits increase, which we all care about. And then in addition, the employer payments of student loans, I will not talk about that, but I'm giving you the section number in case you need to look that up. And I will talk about the employee retention credit and the delay of payment of employer payroll taxes. I will not talk about, but there are some technical corrections related to the Families First Coronavirus Response Act. So those are the things we're going to talk about. We're going to begin with the recovery rebate for individuals. And I edited it, but I stole the bulk of this presentation from a friend of mine who taught with me in a webinar last Thursday. So I've edited a few of his slides, but this is basically his presentation. So I want to give credit there for this portion of the presentation. And for the rebate check, for single persons, you must have filed a 2018 or 2019 return. Actually, that's for any tax filing category. You must have filed a 2018 or 19 tax return unless you're on Social Security or Railroad Retirement Benefits. If you're on one of those, then the IRS will get your information from those related entities, and you will not need to file a return. However, if you don't fit those two categories, you need to file a return in order to get the stimulus rebate. For single persons, it's $1,200. Married filing joint is going to be $2,400. Head of household, $1,200, unless you reach the phase outs, which we'll talk about in a minute. In addition, you'll get $500 for each child under 17. So this follows the same rules as the child tax credit in being children under 17. There are some things to be aware of. First of all, if someone is claimed on a dependent on another person's return, then that person does not get a check. So this is going to commonly impact our college students. If you are claiming your college student as a dependent on your return, they will not get a check, and they will not get a deposit for their stimulus money, even if they file a return. And you're not going to get anything for them either, because remember, you're only getting for under 17. So just be aware of that. If they can be claimed as a dependent on your return, they are not going to get a stimulus check. So be aware of that. All right, there are some thresholds here, and I'm not going to go through them in depth. You've got this in your materials, but basically the phase outs begin at $75,000 for a single person, and you get some degree of stimulus up to $99,000. Married filing joint, it begins at $150,000, and you get some stimulus up to $198,000. Again, I'm not going to go through all of these calculations in depth. It is in your material, but the main takeaway here is on whether or not you need to file a tax return. And of course, the fastest way to get the check is direct deposit. So if you put your direct deposit information in your 18 or 19 tax return, then the IRS will send out these funds via direct deposit. If you typically get mailed a check for your refund, or if you typically send in a voucher for your income tax payment, then you're going to get a check in the mail. And of course, that's going to take longer. So if you haven't yet filed 19 and you might want to consider doing so immediately and putting your direct deposit information on there if you didn't do that in 18. So what if I made less money in 19 than 18? And based on my 19, I would get more in the check, but I haven't filed my 19 yet. Well, then I would encourage you to go ahead and do that, right? What if it's the other way around, though? Then in that scenario, you're going to want to go ahead and not file 19 yet, because it'll be based on the 18 return when you would qualify for more. So that's the good news. And technically, the check is going to be tied to your 2020 return, but you do not have to pay it back if they overpaid you. So that's kind of nice. All right, and that's all I'm going to say about that. You have the material in your in your materials, other than to say that the IRS initially said these would start going out on April 6th, which is today. That did not happen. We do anticipate the first ACHs or direct deposits to go out later this week, so be aware of that. Checks will probably not mail until the end of the month or possibly next month. And the biggest issue there, quite frankly, is that much of the IRS is at home teleworking right now. In fact, nearly all of the IRS is at home teleworking. If you have tried to call the IRS in the last couple of weeks, you've noticed you can't get through. That's because no one's there for the most part. They are teleworking. So because of that, there's not anyone there to really stuff these envelopes. So that's our scenario. How long will it be before they get back to work? This is going to depend some on different state orders and that sort of thing. So just be aware of that. And the Secretary of Treasury has said he may bring some people back to get these out, even if we're not completely in the clear, but he's not doing that quite yet. All right, I want to talk a little bit about unemployment. But before I do that, I'm going to go ahead and launch our next polling question. And this polling question is simply, as a result of this pandemic, my church is in good shape and does not need any help with expenses, is probably okay, but could still use some help, or is in real trouble. We need this. This will just give me a feel for, the churches that are represented on today's webinar, what kind of shape we're in. And I'll give you just a moment to answer that. All right, interesting results. I'll give it a moment. Looks like about half of us have responded. All right. We're still waiting on a few people to respond, and so I'll leave it up for just a moment. But so far, 9% of us say we're in good shape. We don't need any help. That's fantastic. 61% of us say probably okay, but could really still use the help. 31% of us say we're in real trouble and we need this. So good news is we are going to provide you with some information that will help you and will help your churches in this process. So we'll leave that open for just a moment or two. And then we'll get back started here. If you are having trouble with audio or video, then you need to refresh your browser. And it should bring you back in. So again, if you are having trouble with audio or video, you should refresh your browser. At any point, this is a browser-based webinar system, so simply refreshing will bring you back in. That can happen if you have a little internet blip on your side or something like that. All right, we're going to go ahead and close this poll. And it looks like the numbers changed just slightly, but about 30% are still in real trouble. We need this. 61% still say probably okay, but could really use the help. So, all right, good. So we're going to go ahead and look at the unemployment. I want you to be aware of some new things related to unemployment that could impact our employees and also our church members. So first of all, who is a covered individual? It is someone who's not eligible for regular compensation or extended benefits under state or federal law, including an individual who has exhausted all rights to regular unemployment. We're going to talk about that a little bit more. It's someone who provides self-certification that the individual is otherwise able to work and available for work within the meaning of applicable state law, except that you're unemployed or partially unemployed, which could mean reduced hours, or unable or unavailable to work because you yourself have been diagnosed with COVID-19 or experiencing symptoms of COVID-19 and seeking a medical diagnosis, or a member of the household has been diagnosed, or the individual is providing care for a family member or another member of the individual's household who has been diagnosed, or you have primary caregiving responsibilities for someone who is unable to attend school because of this public health emergency. So some of these are going to sound very, very similar to what we talked about under the other provisions, but we also add that the individual is unable to reach the place of employment because of a quarantine or stay-at-home order as a result of the COVID-19 emergency, or you're unable to reach the place of employment because the individual has been advised to self-quarantine, or the individual is scheduled to commence employment and does not have a job or is unable to reach the job as a result. So this could be someone who has been hired but hasn't even yet started. That's pretty unusual for unemployment. Or the individual has suddenly become the breadwinner or major support because of someone who died in the household because of COVID-19. or you had to quit your job as a result of COVID-19. So, for example, you're in a high-risk category, and because of that, you didn't feel you could continue at your place of employment, and you had to quit, then you could qualify for unemployment in this case, which is highly unusual. Normally, when you quit, you don't. Or the individual's place of employment is closed as a direct result of COVID-19, or you meet any additional criteria that the secretary may choose. Or you're self-employed, seeking part-time employment, or do not have sufficient work history, or otherwise would not normally qualify. However, you are not included and not able to claim unemployment if you have the ability to telework with pay, or you're receiving one of the other benefits we've already talked about under the Families First Coronavirus Response Act. So, short answer here is if your employees are able to telework and still do their job, then they're not going to qualify for unemployment. You're still paying them, right? But if they're unable to go to work and they're unable to telework, then they could very well apply for unemployment and qualify. And the other exciting thing about this that has not been true in the past is that now nonprofits are included, even though we typically do not pay state unemployment or federal unemployment. So pretty phenomenal there that nonprofits and government entities are included. The payment calculations are beyond the scope of a tax professional, so I am not going to overly spell that out and vary some from state to state. But the short answer is that it's the state amount plus $600. That's a little simplified. The state has to buy in to receive the federal funds. Most have, some haven't yet. I expect they will. All right, let's talk about special rules for the use of retirement funds. There are tax-favored withdrawals from retirement plans. And there's a section of the Internal Revenue Code called 72T that basically says that there are some things that can happen that enable you to not pay an early withdrawal penalty. This has been expanded for the year 2020 to include any coronavirus-related distribution up to $100,000 in the taxable year 2020. Now, it must be repaid, or it may be rather repaid within 3 years. And if you repay it, it can be treated as an eligible rollover as if it were trustee to trustee within 60 days. So that's pretty fantastic news. If you ended up having to pull this out, how do you qualify? Well, it has to be in 2020. Employee certification is sufficient, and there are 3 basic ways to qualify. You can be personally diagnosed, your spouse or dependent can be diagnosed, or you simply experience adverse financial conditions that are due to the virus. For example, you were furloughed, you were laid off, your hours were reduced, you were unable to work because of childcare issues, closure of the business, reduced hours of the business, those sorts of things. So again, self-certification is sufficient. Now, you also can do loans for up to $100,000. That must be within 180 days of enactment. Enactment, by the way, was March 27th. And if you have loans against your 403B, so like your UMPIP, if you're United Methodist, your United Methodist Personal Investment Plan, if you have taken out a loan against that and you have a repayment date that is scheduled to be within the covered period, so between January 27th and December 31st of 2020, that will automatically be extended by 1 year. And in addition to that, is a waiver of all required minimum distributions for 2020. This is good news, right? Because unless we have to, the last thing we want to do is pull out of the market right now. That would be the last thing you want to do. You do not want to sell when it's low. You want to sell when it's high, right? In fact, if you have funds, you want to throw into the market when it's low. So you don't want to have to take a required minimum distribution right now. That would be selling things in order to do that. So Congress has enabled us to not have to take a required minimum distribution within 2020. Somebody's going to say, but Knox, what if I already did? Fantastic news. You can go ahead, if you're still within the 60-day window, and put that back in. And even if you're not within the 60-day window, you could say that it was a distribution due to the coronavirus-related things if you qualify and have had financial circumstances that have impacted you there, and then you could put it back in even within 3 years. So there's some planning opportunities there that's beyond the scope of this webinar, but just a little tidbit because I happen to notice we have 1 or 2 financial planners who are on the webinar today. Charitable contributions. This is good news for us as churches, but people will be able to take up to $300 above the line for tax years beginning in 2020. Some of us who are older will remember there were 2-3 years back in the 80s when we could do this. But now, even if you don't itemize, which by the way, only 7.8% of people itemized on their 2018 tax returns, which is the last full tax year for which we have data. Since the Tax Cuts and Jobs Act took effect. Well, now you can take an up to $300 above the line reduction, even if you're not itemizing for 2020. So that's pretty good. In addition, we have a 60% limitation for individuals currently, and for 2020, that's been increased to 100%. Corporations had a 10% limitation, and that's been increased to 25% for 2020. And for those of you that have food pantries or food banks, for contributions of food inventory made in 2020, that deduction limitation increases from 15 to 25%. And so that is pretty good. Now, let's talk about the payroll protection loan and the emergency disaster loan and grant. But before we do that, I'm going to go ahead and launch our next polling question. And this question is simply, when do you need the help if you need help? Do you need it within the week or you're not going to be able to meet payroll? Do you need it within the month or you won't be able to meet payroll sometime within the next 60 days? Or although we can use the help, we will be able to meet payroll, or we're in great shape and we don't need help. If you could answer that for me, that'd be helpful. Just kind of lets us know where everybody is. We'll give you just a moment to do that. All right. Looks like about half of us have responded, so I'll give just another moment here. Interesting numbers. We'll give just a moment for the rest to come in here. All right, still waiting on a few, but so far, there is no one that said they need it within the week or they won't meet payroll, and I'm very grateful for that. Unfortunately, the last webinar I did on Friday, we did have a couple of people who were in that category. So glad to hear nobody's in that category here, but we do have 11% of us that need it within the month or we won't be able to meet payroll. So we're going to give you some good options here. About 38% of us need it within the next 60 days, so we'll be able to talk about that. And then we have about 45% of us that say we could use the help, but we're still going to be able to meet payroll. So that's great. And 7% of us that say we're in great shape. We don't need the help at all, which of course is fantastic. So good news there. I'm going to go ahead and close this poll. And there's a few people that haven't yet responded, but that's okay. We're going to close the poll anyway. Someone is asking, will this webinar be available recorded later? The answer to that is yes. If you are attending today, you will receive an email most likely tomorrow morning that will give you a link to the recording. And then for those in the Holston conference tomorrow afternoon, we will actually send out an email giving you access to a website where the recording will also be available, as well as the handouts and some additional information that we have worked on for you. So the answer to that is yes, those will be available for you by tomorrow is the short answer there. All right. Looks like most of us have responded. I'm going to go ahead and close that poll. And we will get back to our content talking about the payroll protection loan and the emergency disaster loan and grant. And these are some great options that will be able to help us pay for some payroll. So you will definitely want to tune in for this part. First question, how do I get cash as fast as possible? Is it the PPP loan that's the payroll protection plan, or is it some SBA loan, or is it some secret way that I read about on the internet that I can get $10,000 in cash real quick, but I really don't want to go meet some dude in the back alley after midnight to get that cash? Help. That's what we're going to talk about today. So before we do a deep dive into the payroll protection program, I want to give a baseline of the main three options that are available. The first option is a quick grant, emergency grant of up to $10,000. We'll talk about that. The second option is the economic injury disaster loan that we apply for with the Small Business Administration at sba.gov. And then the third option is the Payroll Protection Program loan. We'll talk about each of these options, and then we'll actually talk about another option, but we'll do that after we talk about these. So the first option is the Economic Injury Disaster Loan Grant. This is, in theory, the fastest way to get financial assistance, and assuming you use it correctly, it does not have to be repaid. You get up to $10,000, but it must be used for specific broad purposes. For example, payroll, a mortgage or lease, or other obligations that you have, other debt obligations that you have incurred and are unable to pay as a direct result of economic injury related to the coronavirus. And if you're using the Payroll Protection Program, then the loan forgiveness that is associated with the PPP will be reduced by the amount of this grant. So you need to be aware of that. We'll talk more directly about that. This money would be directly deposited into your business account and is available in weeks. So for the persons that said, I need money within the month, I am probably going to encourage you to go apply for the Economic Injury Disaster Loan Grant. But don't do it yet. Listen to the rest, and then we'll come back. All right, so the time needed for the application, this is a super simple application planned for no more than 10 minutes, assuming you have the information available for you. It's not that much. You're going to need your federal EIN number and the date that the church started, so have that available. You're going to need your gross revenue for the 12 months prior to the disaster. And then it's going to ask you for your cost of goods sold for the 12 months prior to the disaster. As a church, you're going to put a 0 there. And then you're going to need your business bank information to direct deposit the up to the $10,000 grant, which will include your bank name, your account number, and your routing number. Now, I recommend that you get a separate bank account, a separate checking account that you have this deposited into and you use just for this purpose. So you're going to spend out of this account for permissible purposes so that you can go back and show, hey, I did spend this for permissible purposes. And if you're asked to prove that, you only have to give the bank statements and the information from that checking account. You don't have to open up your entire finances to be explored by the SBA. You only have to show that account. So this is important. This is especially important for churches that do not have the best accounting, which is a lot of our churches, let's be honest. So I recommend that we have a separate bank account just for this purpose. So let's talk a little bit more about it. What if I had already begun an application, Knox, on SBA.gov prior to Monday, March 30th, when the new application was uploaded? Then you need to go back and redo it again because it did not include the grant. And so you're going to make sure that you go do that and specifically request the grant. I will tell you that because this is also new, I don't know of anyone who's actually received this thing yet. It was all over the media. People were going to get this within 3 days. That's actually what Congress required of the SBA. But the reality is hundreds of thousands of businesses have applied for this, and there are 2,500 employees at the SBA who are working on this, and they simply are overwhelmed because they also have other programs to roll out at the same time. So it hasn't happened. So here's the bottom line. How much will you receive if you apply for the grant? Well, the original articles, and some of you may have seen them in the news, sold this as a $10,000 grant for everybody. What's the reality? We're hearing that the SBA is actually funding $1,000 per employee, and they're made this discretionary decision based on the overwhelming demand. So if the pastor's your only employee, you're probably going to only get a $1,000 grant. If you have 10 or more employees, then you would get the $10,000 grant, and of course, everywhere in between. So be aware of that. The second option is the Economic Injury Disaster Loan. It's more money than the up to $10,000 grant or the PPP loan, but it's also going to take longer. We're anticipating this taking about 60 days to get these funds. And of course, there's no guarantee that you will qualify or be approved for this loan. It is credit-based. But you're going to think of this as a longer-term support for operating and debt payments for businesses experiencing disasters. So you can begin this application online at SBA.gov. It's actually the exact same application that you use for the $10,000 grant. And Congress relaxed the documentation requirements for these loans if it is $500,000 or less. But again, we're going to expect this to take 45 to 60 days in order to get these funds. You can have up to $2 million out of this to pay fixed debts, payroll, accounts payable, and other bills. And for nonprofits, it's going to be on a 30-year fixed rate at 2.75%. So a pretty favorable interest rate. And they will defer payments for a year, although interest will still accrue. These loans are issued directly from the SBA. You do not go to your bank for this. Small businesses, nonprofits, sole proprietors, and independent contractors can apply. And if the loan amount is less than $200,000, no personal guarantee will be required. But be aware, if it's $200,000 or more, they're going to want a personal guarantee. So that's significant for churches. And I've given you the link here where you can go and apply for these. Now, the third option is the Payroll Protection Program. You go to your lender, your local bank for this. We'll talk about that. But this is a short-term loan, helps you pay for 8 weeks of payroll, rent, or mortgage interest, and utilities. It's faster to get than an economic injury development loan. And as a bonus, some of the Payment Protection Program loan will be forgiven. We'll talk about how you do that. But be aware that if you take the up to $10,000 quick cash advance in option one, then the amount of the PPP loan that will be forgiven will be reduced by that grant advance. So be aware of that. Unlike options 1 and 2, which you go apply for at SBA.gov, this one you apply for at your lending institution. Now, we actually said that on Friday, April 3rd, it was open to existing SBA lenders. It is now open to all lenders. So you can go to the bank where you have a banking relationship, and that is where I recommend that you go. In fact, many of our lenders around the country will not work with you on this loan unless you have a banking relationship with them. So start with whatever bank your church or ministry has an account at. That's where you want to start. Sole proprietors and independent contractors, by the way, will not be able to start until after Friday. And these funds we're expecting to come within 30 to 45 days, might be sooner. And so that is where we are on that. The intent of this plan, the PPP, the Payroll Protection Program, is to keep employees on payroll, rehire employees we laid off, and pay for specific expenses that will keep the business doors open: rent, utilities, mortgage interest. Staying within the intent is the key to forgiveness. You can get it from any SBA-approved lender. And again, the SBA has actually said they will take on any lender that is FDIC or FCUA approved. So that's basically any bank or credit union. They are automatically approving, assuming that they are in good standing with the FDIC or FCUA. So again, my recommendation is that you go to your bank where your church or your ministry has a bank account. What is the application period? Well, it's February 15th to June 30. So the effect of this is that you have to apply by June 30th. The period, though, that you can apply has nothing to do with the eligible period to spend the funds. The eligible period to spend the funds is going to be 8 weeks from the date the loan is originated. Let me rephrase that. The date the loan is approved and you receive the money. This means that you must apply for the funds before June 30 or you'll be too late. It is a 2-year maximum maturity. Some of the articles out there said 10-year maximum maturity, but the reality is it's a 2-year max maturity. That actually changed on Tuesday evening, March 31st. So it's not that the articles were wrong. They're probably just old. And it is a 1% rate. Now, that's as of Thursday evening, April 2nd. First, it came out, it was going to be a 4% rate. Then it came out, it was going to be a 0.5%. It's now a 1%. So you could see articles all over the place, but 1% is the reality today, and all fees are waived. There's no origination fees, no collateral required, no personal guarantee required. So this is excellent news for our churches, and there are no prepayment penalties, and payments are going to be deferred for 6 months. So let's slow down and talk about polity for a minute. If you are United Methodist, what do you need in order to go apply for this? Well, first of all, the pastor should never be the person who applies for this. The pastor does not have the right under our polity to encumber the church. Let me say that again. The pastor should not be the person who applies for this. You're going to need church council or administrative council, administrative board, whatever you call it in your church, your leadership team. You're going to need that body to approve for the application of this loan. it will not require a charge conference. And the reason it does not is that it does not encumber the property. There is no collateral, no personal guarantee, and so it does not require charge conference approval, but it does require church council approval. So you need to have church council approval, and then the persons that will go apply will be named by the church council, but most frequently that's going to be either the chairperson of the church council, the chairperson of the board of trustees, or the church treasurer. It could be any of those officers. But that is going to be decided on by the church council, and the church council will need to pass a resolution. Now, in my church, we held a conference call with our church council last night. So Sunday evening, I'm recording this on a Monday. If you're not live with us, we held a church council meeting last night, and our church council unanimously approved for our church treasurer to go and make this application today. And that application was made today with our local bank. So that, from a polity perspective, if you're United Methodist, is how you go about this. If you're a part of another denomination or independent, then you'll have to figure out your polity in your particular church and ministry and setting. Who qualifies for the PPP? Any small business with fewer than 500 employees. Sole proprietors and independent contractors actually do apply for this, and specifically included are nonprofits that are 501c3s or veterans. I didn't mention that today, but 501c3s are going to be those who apply. If you're United Methodist, you are a 501c3 under our group ruling, and you may need the group ruling letter for your lender. Some are requiring it, some are not. If you need that letter, I've given you the URL where you can go and apply and get a GCFA group ruling letter that will take care of you and prove that you are included in our 501c3 group ruling. So who or what compensation can be paid with these funds? Your employees. Note that your independent contractors, sole proprietors, self-employed individuals, 1099 staff cannot be included. But I have to ask, should they really be independent contractors? And the answer in most cases is no. So you need to be aware, if you have 1099 quote unquote staff in your church, you're probably doing it wrong. Your pianist, your organist, your choir director, your youth director, your pastor, your custodian, all of your staff should be W-2 employees. If you have a staff member who cuts your grass, they should be a W-2 employee. Now, if you have lawn service that cuts grass for multiple businesses in the area, maybe some residential places, not just your place, they're using their own equipment, that's going to be a 1099 situation. But if you have an employee or a person who uses your equipment and only cuts your grass and you're paying them, that should be a W-2 employee. Another example of 1099 staff may be a substitute organist who comes in 1 or 2 Sundays a year when your organist is out. That could be a 1099 staffer. But someone who is a regular staff member of your church should be a W-2 employee. If you have this wrong in your church, then you need to fix that. So how do you go about doing that? If you're in a United Methodist church, in terms of our polity, there are several persons that need to be involved in that process. You need to include your pastor parish relations or staff parish relations committee. You need to involve your church council. You need to involve your finance committee because there are some implications there. But you need to move towards those persons who should be W-2 employees being W-2 employees. The reality is, if you incorrectly have them as 1099 staff, you are not going to be able to get funds to pay them out of this act. You do not get rewarded for doing it the wrong way. However, they may be able to apply on their own for assistance after the 10th, but they're going to have to go through that process. So what do? You're going to calculate your average monthly payroll cost for 2019. We're going to multiply that average monthly payroll by 2.5. So for example, if we have an average monthly payroll of $10,000, we multiply that by 2.5, we get a $25,000 loan amount or $10 million, whichever is less. So that's the way it works. So how do we define that payroll and compensation? Well, it's our wages, it's our commissions, it's our salary, or something similar, up to a max of $100,000 annual salary for any individual. So if you and your church or ministry have persons who are making above $100,000, you only get credit for the up to $100,000. We're going to add to that cash tips or equivalent. For the most part, this doesn't apply to churches unless your church is paying for honorariums, that sort of thing. Those are coming to the church, and then your church is giving it to the pastor. In that case, you would include that. Vacation, parental, family, medical, or sick leave that we talked about earlier would be included here. Group health care benefits. So this is going to be your health plan, your group health plan that you're a part of, whether that's clergy or lay. If they're a part of the group health plan, then you get to include that portion in addition, and you also get to include the retirement benefits. So this is going to include, if you're United Methodist, the UMPIP. And I am of the opinion that we can also include our direct billed pension and all of it. So that's going to include, if you're here in the Holston Conference, not only the amount for the pension, but also the amount for the comprehensive protection plan, which is all a part of that 16.3% that we bill here in Holston. So in addition to that, the state or local tax that is assessed on compensation, if applicable, would be included. Now, the guidelines are not telling us what to do about housing allowance, but I am of the opinion that we include it. So this is going to vary from lender to lender a little bit. And the worst risk is we include it and we pay for it out of it. We get some requirements down the line that say we shouldn't have, then that portion wouldn't be forgiven and we would end up paying 1% interest on that portion. But that's a small risk to pay for the chance that it will be forgiven. And I think there's a pretty good chance it will be. So I am of the opinion we include the housing allowance, but we don't have guidance and don't know for sure which way to go on that. All right, documentation requirements. What do we need to be ready to submit? Well, we need to have all of our payroll processor records. So if you're using a payroll processor, they probably have a report for you on this. We're going to need our payroll tax filing. So that's our 941s, our 940s, if applicable. Any form 1099 miscellaneouses or income and expenses if we are a sole proprietor. So if you've got those employees, they've got to get all that together, and they're going to have to submit that. And then for borrowers that don't have this documentation, we're going to have to provide other supporting documentation. So we're going to have bank records, that sort of thing, something sufficient to demonstrate our qualifying payroll amount. What else can be paid with our PPP funds? We can pay for payroll, we can pay our mortgage payment, we can pay our rent, we can pay our utilities. But be careful about mortgage payments. We're only going to get those forgiven for the mortgage interest portion, which means not the principal portion. So be aware of that. So again, on the forgiven piece, what's going to be forgiven? Well, payroll costs. This is all employee compensation, but only over an 8-week window of time from the loan origination date. The interest on the mortgage, but not the principal, and rent. So yes, if you happen to be a church that is renting or a ministry that's renting, you get to apply all of that. But again, you only get the mortgage interest if you have a mortgage, and then we get to include utilities. You're going to need to have canceled checks showing your payments for your mortgage that detail your interest versus principal, your rent, and your utilities. You're going to need payroll reports that show the amount of payroll, number of employees paid, and pay rates. And you're going to need to document that you kept your employees on payroll as compared to previous periods. You're going to need to keep the amount of payroll at no less than 75% of your pre-COVID levels. So the comparison for forgiveness is going to be the most recently filed 941, which most likely means they're going to use the first quarter of 2020 for that. So be aware of that. Some of your lenders are going to want to see that first quarter 941 before they fund, just so they have everything on file right up front. I know they're not quite yet due, but many of they are due in the next couple weeks, but many of the lenders are going to want to see that. So just be aware of that. Note that this is different from the recommendation to use the 2019 payroll figures in calculating your average monthly payroll. So, question. I wrote that the factor to calculate the amount of the loan was 2.5 times the average monthly expense, but that's equivalent to 10 weeks in the year. But I also noted that in the forgiveness section, you can only count payments to employees and independent contractors. And again, the independent contractors, you don't get to count as a church, but if you are an independent contractor, they get to count other independent contractors for up to 8 weeks. So why is there a difference between the 10 weeks and the 8 weeks? Well, the answer is, you can only include the payroll for 8 weeks, but remember, you can also include rent, utilities, mortgage, interest. So this gives you the ability to include both of these items and possibly get those forgiven if you've done it correctly. Other nuances, if you get a PPP loan, you're not eligible for the employee retention credit. And the loan forgiveness reduction for 25% in salary has an exception, and that is for the employees that are paid more than $100,000 in 2019. They're not subject to that limitation. So the bottom line is you cannot reduce any of your employees over 25%. Remember, you have to stay at that 75%. But if you have someone over the 100,000, you can reduce them down to the 100,000, even if that's more than a 25% reduction. And this is going to be irrelevant for churches. But if you have more than 20% owners, you have to be U.S. citizens. Remember that you can roll that grant into the loan, and you can roll the loan into the EIDL program to extend the payment terms if necessary. So let's look at the sort of timing on this. The quickest thing to get, supposedly at least, is going to be the up to $10,000 grant. Then the PPP loan should come in before the end of this month if you go ahead and apply now. And then 45 to 60 days from application, the loan should come in. So for the EIDL. So you could, in theory, roll all of this together if you think you're going to need more help than the 8 weeks. So what happens if you combine the emergency grant with the PPP loan? Well, this is where things get challenging. Because let's just give a scenario. You have a figure of $50,000 for your PPP loan, and you took $10,000 in grant. Well, you can take the $10,000 grant and pass on the PPP loan. That's one option. You don't have to accept it just because you're approved. You could only take the PPP loan and pass on the grant. You don't have to accept it just because you're approved. Or you could take both, which would total $60,000 in total. But you need to be aware of the caveat that you're only going to be able to get forgiveness for up to the maximum amount of forgiveness. So if you get the grant that you don't have to pay back, that's going to reduce the forgiveness amount in the PPP, which means you're going to have a portion of the PPP loan that would be subject to interest and the maturity, which is 2 years and 1%. So not, pretty good, favorable conditions there or terms there, but nonetheless. So why do I have to pay back the $10,000 in interest in this scenario instead of taking the scenario of taking the grant and the PPP? You just have to remember how the grant impacts the forgiveness. But there is a fourth option. That is that we combine all of these. We take the grant, we take the PPP loan, and then if we're approved for the EIDL loan, which is not automatic, by the way, because there is a credit check on that, then we can wrap the repayment of whatever funds are left over into the EIDL, and then we wouldn't have that 240-month repayment period. We would be able to stretch that out over 30 years, although it's going to be at 2.75, whatever that balance is. So by combining all of those, we're able to possibly get much longer payment returns and additional funds in addition. But we're just remember, no guarantee on the EIDL. So what about religious protection? Someone wants to know, hey, if I take these loans, how does that impact me? The good news is that there is nothing in taking these loans that is going to impact our religious freedoms. And so that is good news for us. Now let's talk about the payroll tax deferral. This is the deferral of employer Social Security payroll payments. Employers and self-employed individuals can defer the payment of the 6.2% employer share of the Social Security wages on 2020, and that deferral period is March 27 through December 31. The 50% of deferred taxes would then be due in 2021 and the remaining 50% in 2022. But you do not qualify for doing this if you take the PPP. Now we're going to talk about our last option in just a moment. But before we do that, I am going to look at some Q&A real quick and make sure that we can answer these things. Fantastic. So Elaine says that the Wesley Center and the Louisiana Annual Conference has already received the $10,000 grant. Elaine, I'm glad to hear that. You're actually the first one I've heard that's already received. Let me know in the chat, Elaine, or in the Q&A when they received it. Be curious to know that. So that's fantastic news. So they're starting to fund those. That's great. The wages and gross calculation for the PPP, is it gross pay? So yes, when we're talking about the 2019 average look back, it's going to be gross pay. However, when we're talking about the forgiveness amount, it does not include the employer FICA for federal. So that's kind of a weird thing. The employer portion of payroll taxes are not included on the forgiveness calculation, but are included on our average monthly payroll expense calculation. So that's a little bit complex, but hope that answers your question. And someone's saying they're having trouble with sound and they need to refresh the browser. But yes, there will be a recording as well. All right, so let's see if Elaine has answered my question. All right, looks like someone else said refresh, so hopefully that person did. And Elaine, I am curious as to when that received it. So Richard is asking, what is the procedure for getting the loan forgiven? It's actually going to be the lender that handles that. And so the same lender that issues the loan, you're going to give back the information, and then they will make that determination within 60 days of when you submit that. So you won't be able to submit that until after the 8 weeks, right? And then you're going to submit the application for forgiveness, and they have to make a decision within 60 days. Elaine said they received it today. So fantastic news there. I am really glad to hear that. That is the first one that I have heard has been funded. So that funded today. And I'm actually really, really glad to hear that. So that is fantastic news. Super glad to hear that. All right. How are utilities included in the forgiveness but not included in the load amount? Great question. So in the load amount, you're going to take 2.5 times the average monthly payroll expense. That is going to give you more than 8 weeks of payroll in most cases, right? So that extra amount, that extra 50% or actually 25% that you see there is going to be the amount that can be used for utilities, basically. So that's kind of how that works. So you can use it for utilities, for rent, and also for mortgage interest. So I hope that answers that question. In the absence of sick leave or medical leave, can we furlough employees to reduce manning but keep payroll at no less than 75% if we apply for a PPP? The consequences of below 75 would be loss of forgiveness. So first, yes, the consequences of below 75 would be loss of forgiveness. Assume this will be resolved when we submit average FTEs before and after the loan. That is correct. Jim, I'm going to tell you that I strongly encourage you to consult an employment attorney before you furlough anyone. But the short answer is I think you're on the right track. I just cannot give you employment law advice because I'm not an attorney. Betsy is saying, do clergy count as regular employees? If we're paying our own self-employment tax, do we have to apply for PPPs as self-employed? Excellent question, Betsy. Yes, clergy count as employees. Remember that we are employees for IRS purposes, and we do get issued W-2s. So we're going to count as employees for this purpose. In a 2-point charge, Donald is asking, even though we use one treasurer to submit direct billing and write payroll checks, does each church need to do their own submission for the stimulus? So the answer there is it all depends on who issues the W-2 and potentially files the 941s if there is more than the pastor on staff. And so the answer there is going to be whoever files W-2. So if you get one W-2, it's going to be the church that files the W-2. So in some 2-point charges, the smaller church typically will send money to the larger church, and the larger church actually pays. If that is the way it works, then it is the larger church that has to apply because they're the one actually paying from a federal law standpoint. If both churches are paying the pastor independently and both churches are issuing W-2s, which also happens in some churches in our annual conference, then in that scenario, both churches are going to apply. So I hope that answered your question, Donald. If not, you're welcome to ask a follow-up. The worksheet, David says, provided by my lender, tied wages to the amounts reported on 941s. This is not gross pay, where the worksheets they provided incorrect. Yeah, so the great thing, David, is lenders are treating this differently. You're going to have to go with the way that your lender is treating it. Unfortunately, there is not a uniform solution that all lenders are following. That would be nice, but that's the way it is. Would I recommend a separate bank account to handle the PPP loan just as the $10K for the grant? Absolutely. I'm recommending a separate bank account for any of these funds that you're getting in that might be forgiven and that you have to prove the way that you spent these funds, right? So whether it's the grant or whether it's the EIDL actually, because you still have to prove those funds, or whether it's the PPP loan, I am recommending a separate bank account. Yes. And on the emergency grant, when you apply with 2 gift annuities that assist with bill payments count as gross revenue, the answer to that is yes. I would include those in gross revenue. And I think I've answered all of the questions so far. So fantastic. All right. So we are going to move along here. And we're going to take a look at the employee retention credit now. But let me grab a quick drink. All right. Needed to wet my palate. So First thing we need to know about the employee retention credit is this is a refundable credit. It is worth up to 50% of qualified wages in the qualified quarter. However, employee wages are limited to only $10,000 in aggregate that is counted for that employee. So, for example, 50% of 10K, of course, is $5,000. So that means that the maximum credit per employee is going to be $5,000. Eligible employers are going to be any which are carrying on trade or business during the calendar year 2020. Duh. And with respect to any calendar quarter for which the operation of the trade or business is fully or partially suspended during that quarter due to orders to close or to limit commerce, travel, or group meetings. So this is going to be any of our churches that are subject to the stay-at-home order, where churches are basically prohibited by government. Now, this is not by a bishop. This is churches that are prohibited by government. So this is every church in Tennessee that has 10 or more persons that is a part of your average worship. This is some churches in Tennessee. It varies by locality, by county, and because it's not a statewide order that limits churches. But there's another way that you can qualify as well, and that is a significant decline in gross receipts. And the way that that is defined is you compare the quarter with the previous calendar year quarter, and if your gross receipts are less than 50% of the same calendar quarter in the previous year, then you are considered to have a significant decline in gross receipts. And each quarter, you're going to start with that first quarter that happens and count each quarter up until you get back to 80% of gross receipts. So that's the way that that works. Let me give you an example because this is a little bit complex, but that's the way that we're going to handle that. So, by the way, tax-exempt organizations are eligible. In this case, it's all 501cs, not just 3s. So let me mention that. And the wage calculation is actually dependent on whether or not there are more than 100 employees. So if you have greater than 100 employees, you're going to only count those that are not providing services. For example, let's pretend I have a daycare, I have a school, I have a large church, and I have a lot of employees that are a part of my organization. And many of them are not working, but my pastor, my tech team, some of my program staff are working on worship in particular and providing Bible studies, providing children's programs online, these sorts of things. These persons are providing services. They are not going to count in a church that has greater than 100 employees. But if less than 100 employees, all employees count. So I would count, for example, even though I am still providing services, my church is closed by government order. We're still operating virtually, but our building is closed by government order. We're not able to hold our regular services. So for this calendar quarter, for example, I'm going to be eligible. And so for this particular provision. By the way, the Families First Coronavirus Response Act benefits are excluded, so you can't double dip. And there are aggregation rules that have to be considered. So, for example, if you have a church and a daycare, they're under separate EINs. They are under separate payroll systems, but the church controls the daycare. The church owns the daycare. Then in that scenario, they're going to be aggravated to see how many total employees there are. Third-party payers, by the way, are specifically allowed. Let's go through an example so we can get an idea of how all of these different provisions may work. All right, Company A, or Church A, has 2 full-time employees that are each making $4,000 a month and 3 part-time employees. Their average monthly payroll is $10,000. So doing some quick math, the 2 times 4 is 8, so that means that the remaining 2 is split among the 3, right? We're going to assume that they're in an impacted area, and we're going to assume that the revenue is down by at least 50% in both quarters 2 and 3 and back to 80% in quarter 4. So what are the options that they have that could help them with the payroll cost? Well, the first option is the EIDL grant, which in this case would be $5,000 because there are 5 employees, right? The EIDL loan could be up to $2 million. And the PPP is going to be 2.5 times the monthly average payroll. So in this case, we said the average monthly payroll was $10,000. So that's going to be a $25,000 loan. And then the employee retention credit option. Well, we have 2 full-time employees. We have 2 quarters here. So that's going to be 4 times 6, 2 quarters is 6 months, right? So 4 times 6 exceeds our maximum of 10,000. So we know we're going to get $5,000 credit for each of those. We're going to multiply that times 2 because there are 2 of them. So that's 10,000. Then we know that there's 2,000 remaining that's split among the 3 part-time employees. So we're going to take that 2,000, multiply that by the 6 months involved in those 2 quarters, and then we're going to multiply that by 50%, or what I put on the screen was divided by 2. And if I've done my math correctly, we get 16,000. So these are our options. So we're going to look at this and we're going to say, which option is best for me? Well, let's see. And we're going to look at our options, and as a church council, we're going to decide which of these options we want to avail ourselves of. Now, you cannot do the PPP and the employee retention credit. You cannot do both, okay? But you can do the EIDL loan and the employee retention credit. You just can't double dip for the same purpose. So in that case, I could not use the $5,000 in the grant towards payroll. I would have to use it towards other items, which could be rent, mortgage insurance, utilities, other things. But my period to spend the EIDL grant is actually through the end of the year. So I may well have that $5,000 in expenses. So again, you're going to weigh your options here, and you're going to figure out what is best for my particular option. And then the other option, which I think is going to almost never be the right option, is the delay of payment of employer payroll taxes. All right, we are going to look in just a moment at the PPP application, and I'm going to help you to figure out how to fill that out. But before we do that, I want to get back to some Q&A. So for a ministry outside the local church, can the director of the ministry apply, or does it need to be a member of the board of directors? So the short answer to this will depend on the polity related to that particular place, and if it is a corporation, for example, specifically, what do your bylaws state? So Betsy, that's going to vary a little bit from place to place. If it is a United Methodist related institution, then the best answer is going to be a member of the board of directors and or the treasurer. But the authorization would need to come by the board of directors almost certainly. All righty. We just began, Donald says, issuing one W-2 during 2020. Therefore, for a 2-point charge, I assume we still have to submit individually. Yeah, so that does become complex because 2019 is what's going to be based on. So you probably do have to submit individually. The bad news is the second church is not going to have payroll that it is actually issuing. So what you're probably going to want to do is that one of the churches may want to do the PPP, the other one may want to do the grant. That's probably what I would do in that scenario, or possibly both do the grant, depending upon how much you need and that sort of thing. So, but again, you'll have to run the numbers and look at what makes the most sense there. I mentioned a Methodist church, the church council. This is Kathy, needs to approve the application of the PPP. Our church has an administrative council and staff parish relations. Which group needs to vote on the PPP? Administrative council. So church council, administrative council are interchangeable. Just depends on the church, which one they're calling them. So, yep. Linda Hamilton says, if you've already applied for the grant with the info of your current account, can you start an account after the money arrives? Yes, you can. And in that scenario, I would just move that money that full amount straight into the other bank account. So you can still show that you're starting from that full amount. That's what I would do in that scenario. Can I ask Elaine how many employees the Wesley Center has? So Mary is asking Elaine, how many employees does the Wesley Center have? So if you can let us know that would be great. If you know the answer. Don is asking, do pre-Ks with separate EINs but controlled by the church, we elect its governing board, apply for any of this on their own? So yes, if they have a separate EIN, but they're handling their own payroll, they're going to apply on their own, but they're going to be considered an affiliated entity. So for the purposes of figuring out whether you're above 500 or above 100, depending which option you're going on, they're going to be aggregated. So Don, in your case, I don't think that's going to be an issue knowing your church. But that's the answer there. If you have any other follow-up questions, feel free to ask. The Wesley Center has fewer than 50 employees, Elaine says. So thank you. And Mary says, congrats on the grant. Yeah. All right. Richard, you're supposed to put these questions in the Q&A, but I happen to notice it, so I'll answer it. Roy says, before I do that the handouts tab says handouts disabled. How do I get them? My guess is, Roy, you're on a phone or a tablet. And so the answer to that is that you need to email me, and I will get them to you. If you'll email me, I'll send them to you individually. And I just put my email there in the chat, so you can email me and I will send them to you. It won't let you download from a tablet or a phone, unfortunately. If you're on a computer, it should. Mary's asking Elaine a follow-up question. Do you have at least 10 employees? All right. And by the way, that new guidance that's saying they were only funding the 1,000 per didn't come down till last night. So I don't yet know how they're going to handle those that applied before that, if it's going to kind of be retroactive or not. I don't know. So I'm curious to see your answer too, Elaine. My guess is that you do, since you said less than 50, but yes, Elaine said they do. All right. This is good. See, I love having someone on that actually received it. That's encouraging because I have not. So to be perfectly honest. All right. Awesome. All right. So we're going to look at, one other question Lawrence is asking, should we use our normal bank, or is there any advantage to using an SBA approved bank? Lawrence, I would go to your normal bank, wherever you have a checking account. And then only if they are not willing to do it would I go to an outside bank. Most of the previously SBA approved banks are not handling anyone outside of their customer base of the larger ones because they're slammed. So I would go to your local bank and they can get automatic approval to do this. And I'm sure they know about it already. And so that's where I would start. Only if they will not do it, then I would go the other route. So hopefully that answers your question. All right. We're going to look at the application real quick. And I am going to throw it on your screen, and everyone should begin to see the application. It may take about 30 seconds for it to come up here, because there's some nuances I want to discuss that will help us out while we're waiting for that to come up. Dave is asking, my wife directs a preschool at our church. They've not been able to work since the virus. Are the preschool staff eligible to draw unemployment? There are 8 staff members. And yes, assuming yes is the short answer. They should be eligible to draw unemployment. So that's a yes, depending on the state. But assuming the state bought into the new stuff, yes. Richard says we provide space and utilities for a child care center in our church building, but the child care center has their own EIN, their own board, their own directors, their own employees, totally separate bank accounts. So that's pretty much the same question as Don asked earlier. They are going to apply on their own. You're not going to include them in your calculations, but they're probably affiliated if you control things. And so the implication of this arrangement is that you have to include them for aggregating employees. So this is going to depend whether you get over the 500 or over the 100 mark, right? That's basically the implication there. Other than that, you're good to go. All right. So I put the application on the screen. It's important, obviously, assuming you're a 501c3, that you mark the box that says 501c3 up there at the top. You're going to put your average monthly payroll here. Now, here's what I recommend you also send. And I kind of had this on another slide, but I am going to recommend that you're going to send your 941s for 2019 and your first quarter 941 for 2020 if you have it available already. If you don't have available, try to get it, but I would include that. If you don't have it yet, go ahead and apply and you can trail it. But you definitely want to include your 941s for 2019. You probably also want to include your 940, if applicable, for churches it may not be. And you want to include your W-2s. In addition to that, I'm going to include a spreadsheet, right? I would include a spreadsheet that shows how I came up with my calculations. And then I'm going to multiply that by 2.5 times that average monthly payroll, plus the amount of the grant, if I've already received that, or the EIDL. And I'm going to put that over here if I want to roll that in. And then I'm also going to put my number of employees over here. Now, this is the full-time equivalent space where you're going to put number of employees. So, again, full-time equivalents for SBA purposes of 30 hours or more. And then I'm going to check the boxes here that I want to include. So everyone will include payroll. Then you're going to include lease or mortgage interest, if applicable, and you're going to include utilities. And no one is going to check other, because these are the only things that can be forgiven. So you don't want to put anything over here. Now, ownership It says list all owners of 20% or more. If you're a church, if you're a nonprofit, there is no owner, right? There is no owner. But if you're doing a daycare or some other ministry, a camp or something like that, you may well have an owner. The owner may be the conference, the owner may be the church, the owner may be the district. So you are going to put that information here. So again, no owner if it's a church, right? Or 501c3 ministry in most cases. But some of our ministries may have an owner here. So be careful of that. I have heard of a few banks that are wanting something here, even if it's a church and there is no owner. If your bank requires it, don't fret. Just put whoever's filling out the application, their title. For ownership percent, put 0. And then their social and address. And then you're going to answer these questions, which are fairly straightforward. The only one that I want to point out is that you have to be able to say that you have had some kind of injury or anticipate that you might have some kind of injury relative to this particular pandemic. So here's the question. Current economic uncertainty makes this loan request necessary to support our ongoing operations. So you need to be able to answer that with the affirmative in order to apply. It's a self-certification. So you have to decide what that means, or your board does. But this is not required in order to do a couple of the other options. So just be aware of that. But for this one, it is. All right. And then obviously the authorized representative, the name, the date, and the title is going to be here. And Patty is asking, any idea how long banks are taking to process these PPPs? That varies a ton from each bank. I do know of people that have already been funded on the PPPs. I know of other people that have not even heard back from their bank about the application process. We called our bank this morning. We meaning my church. We called our bank this morning, and they got back to us. We submitted the application this afternoon along with all of the supporting documentation that they requested. And we heard back saying, great, we received it. It's now going to our commercial lending team. I have no idea how long that's going to take. But again, this is going to vary a ton from bank to bank. How slammed they are is a big piece of that. Dave says, when trying to apply online for unemployment, it asks for a UN number. That's an unemployment number, I think. And so if they are filing unemployment taxes, they're going to have that UN number. If they're not, I don't know what you put there. They're going to have to call the state and see what to put there, because that's a state specific thing. So they would call the unemployment office and ask that question. Richard says, our church has 3 full-time employees and 4 employees who work 20 hours per week. Can we then apply for the PPP for help only for the 3 full-times? No, you can apply for help for the full-time and the part-time. It's just on the full-time equivalents where it says how many employees, you're going to put how many full-time equivalents based on the 30 hours. Next question. We only withhold Social Security and Medicare on 4 part-time employees. How do we get a refundable tax credit? So Tim, you're going to have to go back and tell me which one you are referring to. But basically, when you fill out the 941, there's going to be a place on the 941 now for the amount that is refundable. That's option A. Option B is you fill out form 7200, which I've included a draft of in your handout. And actually, let me, I don't have it here. Let me upload a form 7200 real quick, and I can walk you through what that looks like, assuming I can find one quickly. Where do I have my form 7200? Here it is. Give me just a moment, and I'll get that on the screen for you. All right, so the 7200 is pulling up. You'll notice this is a draft document. You do not want to file the draft, but you will notice here that it actually has a place, if you look at Part 2, Box 1, for the total employee retention credit, and you'll put that there, and then you can get that credit right back to you. There's also a place for the sick leave and the family leave wages. So those 3, and you get the refundable credit, and you should be able to get this advance within 2 weeks. So that is one option that goes there for sure. And no, it's not the same application for the PPP and for the grant. So the PPP application I've included in your handouts. The grant application, you're going to go online to the website that I provided for you on that screen. And let me see if I can get back to that screen for you, because I did provide that for you. The question is, can I quickly find it? Here it is. So give me just a moment, and I'll see if I can get that back onto your screen here. So bear with me. All right, so there at the bottom where it says Streamline Application Process, that is the URL that you go to and you fill out for the grant. The PPP is you apply for that through your bank, your local lender, and you use the application I gave you for that. Can I go over the question again that needs to be answered yes to? Yes, I can do that. So let me go back to, let's see, let me pull that back up. And give me just a moment to get that back on the screen here. All right, so that question is right here. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So that's for the PPP. So if you can answer that, yes. Now, most of our churches have had an impact here, right? We're not meeting in person, and so our revenue or our income is not as high as it was pre this experience. So if that's true for you, then I think you can answer this as a yes, because our economic uncertainty means that we are impacted by this, and we don't know how long that economic uncertainty is going to continue. Nobody knows, right? And so I think you can answer that yes if that's true for you. But you have to decide. The person signing it in particular has to be comfortable with certifying that. So these certifications, the person signing it is going to initial each of these certifications, and you need to be aware of that. And then you're going to answer yes or no to the ones on this question, which are basically, have you defaulted on any federal loan, that kind of thing. So hopefully the answer to that is no. All right, I believe we are actually at the end of our questions. I'll give you just a moment in case you have any other questions, but I'm going to throw up our last poll today, and that is, how helpful has this webinar been? Super helpful, moderately helpful, or a waste of my time? And that just helps me to know how helpful we have been to you today. And if anyone has any last minute questions, go ahead and throw those in. Otherwise, we will end here shortly. But I will give you just a moment to answer that poll for me. And it looks like about half of us have answered. All right, and someone is asking who signs the PPP application. This is going to be decided on by the church council. In my church, it's the treasurer, but it could be the treasurer, it could be the administrative council chair or church council chair, or it could be the chairperson of the board of trustees. Any of those would be appropriate in a United Methodist church. Just a comment for anyone who uses Regions Bank or any other who uses an online PPP, better to apply in person. All right. Lawrence just says, thank you. You are welcome. Lisa says, I'm a little bit confused. The quick emergency funds are a grant. The EIDL and PPP are loans. That is correct, although the PPP can be forgiven if you spend it in the right way. So our anticipation at our church, we've calculated exactly how much we need that to be. And we anticipate 100% of that being forgiven. But remember, worst case scenario, if you goof it up, then whatever portion is not forgivable, you're going to have a 1% interest rate on. So that's not too horrible. And there is no prepayment penalty. So you can prepay that without any penalty. So Lisa, I hope that answered your question. If not, please ask a follow-up, and I will certainly try to answer that to the best of my ability. Want to make sure that we get everyone the correct information. On behalf of the Holston Conference Council on Finance and Administration, I want to say thank you so much for coming. It is our goal and our desire for all of our churches to be able to receive the funding that they need in order to not be negatively impacted by these. To that extent, not only are we providing these webinars and providing you with information on how you can get funds to help your ministry, we also have enabled online giving for each of our churches, and we as a CFA are eating the cost of that. And so if you don't already have online giving set up and you want more information about that, reach out to us at the conference office and we'll be more than happy to help you with that. If anybody needs more information, you get questions that come up later, or anything that comes along the way, I have provided my email address here. It was also in your confirmation email. You can reply back to that, and that will come to me. Feel free to ask me any questions, and I'll be happy to help you with that. I'd also like to hear about your successes. So as you get approved for things, let me know. Or if anything pops up that surprises you, let me know those things. That will help me to help other persons along the way. And so other than that, we are so glad that you are here. Looks like lots of people have asked another question here, so let me go ahead and answer these real quickly. If you are ready to drop off, you're welcome to do that, but I am going to answer every question that has come in. Thank you, Mary. Don't know that I overly want to say that out loud, but thank you. I appreciate that comment. Appreciate that. Elizabeth is saying, if you determine that you can't use all of the funds, can you request a lower loan amount? Yes, absolutely, you can. You can definitely do that. Lisa says, thank you very much. You're welcome. Lots of people saying thank you. I'm not going to read those out loud, but thank you. Let's see. Any other real questions here? No, looks like we're good. Tony says, thank you, Knox. So interesting. I had to watch it twice. Not a problem. We're glad to do that. Not a problem at all. All right. Well, thank you so much. You will receive a copy or a recording link so that you can watch this again. I know I threw a ton of information at you, so you'll receive that tomorrow morning, most likely. And then also tomorrow afternoon, if you're a part of the Holston Conference, Tim Jones, our Director of Communications, will be sending out some information on a website that we are setting up that will have a link to the recording as well, and also the handouts if for some reason you weren't able to get them. But if you weren't able to get them, you can email me. I'll get them back to you even as soon as tonight. So with that, we'll say good night, and thank you all for coming. We are so glad that you care enough about your churches to be here and to find out information. We appreciate that very, very much. So hope that, will the link include the downloads? No, the link will not include the downloads. The downloads will be on the Holston CFA site, but if you need the downloads and weren't able to reach those, Elaine, just email me and I will certainly send them to you. But no, the link will not include the downloads. They'll just include a recording. So, but if you need those downloads, if you weren't able to reach them on the handouts tab, just email me and I will personally email them to you. With that, let me close this with a word of prayer. God, we thank you so much for each of these persons who care about their ministry. We give you thanks for them, God. And we give you thanks for each of the ministries that are represented here, for the churches. God, we just ask that you continue to bless these ministries and these churches, bless their efforts to further your kingdom. And God, we just ask that you guide each of these administrative councils, church councils, leadership teams, that they are able to make the right decisions for their ministry and their church in today's environment. So God, we just ask that you pour your blessings upon them, pour your spirit upon them, that they may feel your presence as they make these decisions. And God, we pray for all of those who have been impacted by this virus and who will be impacted by this virus in our communities. Pour your spirit upon them, God, that they may feel your presence and they may know that whatever lies ahead, you will be right there with them. We pray all of this in your Son's holy name. Amen. Good night, and thank you for being here.